The Chart Nerd TA video. So today I'm going to be basically doing an update on a few indicators, a few things that you can add to your charts to help you predict which way the market might move, how these indicators work and where you can find them. Okay, so basically what I've got at the start here, this is Algorand on the weekly time frame. Okay, so just to start off, in case anybody's unaware or if you're new to charting, if you are, then please do take a listen here, because this will help you put things into your charts that will help you predict, again, which way the market might be moving. Okay, not financial advice, it doesn't 100% have to go that way. And again, if you already know part of this information, do skip forward in this video, and I will be looking at a little bit more in depth about a few more indicators. So basically what we're going to start off here first with is the time frames. Okay, so each candle, no matter what time frame you're on, represents the time frame. Okay, so say for example you've got this red candle here. Okay, so here on the weekly time frame, this red candle indicates 1 week of price action. Okay, whereas if you was to go to the daily time frame, okay, whatever candle you look at here, potentially you've got, let's say for example you've got this small green candle. This green candle here represents 1 day. If you go to the 4 hour, okay, this candlestick here for example, it represents 4 hours. So whichever time frame you are on, each candlestick represents that amount of time. Now what we do in crypto is the larger the time frame, the more you zoom out. Okay, so if you're looking at the 1 hour, you're very zoomed in at the price. Okay, and it's hard to predict in the long term where the price might be moving, because you're on such a small time frame. Now when you go to something like the daily, it's a little bit more reliable, okay, because you're a little bit more zoomed out. You can see what's going on in the bigger picture. When you go to the weekly, even more so, and the monthly thereafter, even more so again. Okay, so it just zooms it out for you and basically squeezes it down to show you the larger patterns that are happening on the larger time frames. So we can basically tell different stories through looking at different patterns within the charts on smaller time frames where the price might go in the near short term. And if we zoom out and look at the monthly, it's easier to kind of predict and have a look a little bit about what might happen in the long term. Okay, so for short-term investors and day traders, they tend to use the smaller time frames like the 1 hours, the 4 hours, the 5 minutes and stuff like that, whereas the long-term investors tend to look at the more zoomed out perspective and see where the project is over longer periods of time, okay, and where it might trend in the coming years for long-term investment. Okay, so that's just basically looking at the time frames. Okay, that's one part. So now that we're on the time frames and we're going to look at the weekly here. Okay, what you can do now is we're going to add some indicators. So if you come up here to indicators on your charts, okay, two of the basic indicators that a lot of people use are called EMAs. So that's an exponential moving average. So it's the average of the price over a certain time. Okay, so I mean, typically what people use, you type in here EMA, it's the top one here. Okay, you can favorite that because it's one that you'll be using quite often. Okay, now what these are used for, we normally have 2 on our chart at a minimum. Some people have 3, but for me, I normally have the 20 EMA colored yellow, okay, because it stands out a bit. You can choose the color of the EMA, the thickness of the line, okay, and then you go to inputs and you put in 20, okay, and that will put this yellow 20 EMA on your chart. Now the second line that we use, again, we go to the length, we go to 55, we go to style. I normally have this in red and double thickness. And now these 2 EMAs are the basic EMAs that I use. So these are the exponential moving averages. So this is the moving average of the price over a certain amount of time. Now why these indicators are important is because they give us certain signals. So basically when you're under these EMAs in price action, okay, and you're under it, they indicate a bearish trend. Okay, when you're under these EMAs, the red or the yellow, okay, the 55 or the 20, if you're under it, you're in a downtrend. If you're above them, you can see you're in an uptrend. Okay, so it's very easy to see in regards to EMAs what sort of direction the trend is heading. Okay, and another key indicator here that gives you a good signal is when you get something called a bullish cross or a death cross, okay, between these EMAs. So here you can see that the price was under, okay, and then the 20 EMA creeped above the red. Okay, it creeped above the red line, so that gave us a bullish cross. That indicated, okay, that we was entering some sort of uptrend. Okay, and then we came down here, found support on this 55, okay, and we continued our uptrend. At this point though, we started to fall below the EMAs right here. We fell below, and within doing so, we created something called a death cross, where the yellow goes under the red. Now when the yellow goes under the red, that indicates that you're entering a downtrend. And now you can see that you're under the EMAs and therefore you're in a downtrend. So guys, use these signals because they do help. Whenever you get something like this on the weekly time frame, that's a good option to go long, okay? And whenever you get something like this on the weekly time frame, it's a good option to go short. Okay, so you can use them to help identify which sort of way the market's heading. Okay, so as I've said, when you're above these EMAs, you're in an uptrend. When you're below these EMAs, you're in a downtrend. Okay, guys, so you can use those on any sort of time frame. You know, you can use them on the 1 hour, the 4 hour to kind of indicate in the short term where the price might be moving. But for me, I like to look at them on the zoomed out perspective and having a look at where we are. Now, one more thing between the EMAs, okay, is that when you get gaps, okay, so you can see this red EMA here and this yellow EMA here, okay, you can see there's a big gap between them and the price is overextended and far away from these EMAs. What tend to happen is either to the upside or downside, depending on which direction the market's heading. When you've got this gap, you do tend to pull back to the EMAs as magnets. Again, when you've got this gap here to the downside, you do tend to sort of pull back towards the magnets. Okay, you pull back to the EMAs. They're like magnets. So whenever you've got a big gap to the upside and the price is overextended, look for a correction. Whenever you've got a big gap and price is overextended to the downside, look for a retracement. Okay, so that's a quick update on the EMAs there. Do get them in your chart. Again, I've got the 20, which is this yellow, and this 55. Okay, you go to indicators, type in EMA, and you can get them on your charts. Now, getting rid of those EMAs for a second, we're going to look at a few other indicators. So I'm going to get in the stock RSI, okay, which is another one that a lot of people use. I went over this in a couple of videos yesterday for you on, I think it was XRP and Algorand itself actually. Now, if we look at Algorand here on the weekly time frame, let's see what the monthly's saying. Oh, gosh, look at the monthly. So looking at the weekly time frame, right now in price, to me, this looks like a sell point, okay? Because what this shows us here, the stock RSI indicator is an indicator used in technical analysis that ranges between 0 in the floor and 1, or 0 and 100 on some platforms, and is created by applying the stochastic oscillator formula to a set of relative strength index, so the RSI values, rather than to standard price data. So it bases it off some sort of RSI, okay, the strength of the coin basically at the time. So right now you can see the strength of the coin is nearly at the 100 mark, okay, we're at the overbought area. Really and truly, you can see that when you're down here in these lows, okay, if you look at the price in these lows, I'm going to show you in a second. Right now, if we look up to where the price was, okay, you can see that the price was literally in the floor here, okay, and you had a low. Now what followed in the stock RSI is you had this impulsive move. Now if you look at the charts from this low, you had this impulsive move, okay, and this indicated you was overbought. And now right here you was overbought. So what happened is this started to roll, you came back down. Okay, look what happened. This started to roll, you came back down, and then you found another low. You found another low here in the RSI. Buy opportunity, ride the wave up, sell opportunity, sell opportunity. Okay, come back down, buy opportunity. Okay, buying opportunities. So you could basically trade the ranges. Okay, so here on the weekly time frame, just looking at this stock RSI, what this tells me is right now we're a bit overbought, and we are going to be looking for a bit of a pullback, okay, on the weekly time frame for support somewhere. Okay, so potentially we could be coming back down to retest the lows, and if we do, at that point I would expect the stock RSI to be a little bit lower and offer a bit more opportunity. Okay, but the tricky thing is you can look at this indicator on different time frames. So on the weekly it says we're overbought, which is looking for a sell-off. But if you go to the monthly is the lowest it's ever been since its inception. Okay, it's in the floor. So if you look at the monthly, this looks like we're about to start coiling up, doesn't it, and start to break out. Okay, so in the near short term, what that basically might mean is for the next couple of weeks, the stock RSI might need to cool off, and we retrace to these lows. But within doing so, this is just going to drag on a bit further and give us more opportunity to buy in this area before a next impulsive wave, of which I'm expecting on the monthly time frame to happen on the stock RSI. So for me, all this is about is buying low in the stock RSI. Okay, so you want to buy on the floor. Okay, you want to buy these points down here because they offer opportunity. And then when this starts to come back up and you start to see this come back up here, okay, and the price does something like this where it gets a bit extended again, you're looking at a sell opportunity. Okay, so sell the top, buy the bottom. Okay, because the bottom is going to come down in price. Sell the top. Okay, when you come back up, sell the top. And then come back down, buy the bottom. Come back down, buy the bottom. Okay, so it's literally, you could trade the ranges within this indicator by itself. I tend to use the daily because it's a sort of medium average between the smaller time frames and the larger time frames when using the stochastic RSI. So for me right now on the daily time frame, it looks like we're getting into an area of opportunity here for Algorand. Okay, and if we do sort of hold the lows that we currently have and we're coiling up like this here, we're looking to get a sort of push to tackle out this high. Okay, because you can see that this RSI might start to come back up, and if that starts to come back up, the stock RSI, and starts to curl, what you're going to get is the price action starting to curl and coming back up as well. Okay, so do get the stock RSI indicator into your charts because it's very, very helpful in predicting which way the market might move forward. Now, I mean, guys, in simple terms, that's probably a basic update that I can give you. So you've got the 2 EMAs that you could add on, the 20 EMA and the 55, and then you've got the stock RSI. Okay, so for me, they're basic indicators that you can use to trade, not financial advice. Okay, but buying the lows in the stock RSI and selling the highs in the stock RSI are very fruitful, whichever time frame it may be. Okay, you can use to predict which way the market might be moving. And yeah, that's just a quick update on a few of the indicators that I use and where to find them. So whenever you do need an indicator, guys, if you might go online and look for a different one, you know, there's as I said, there's the EMAs, okay, there's the stock RSI, there's also the MACD, which a lot of people use, which is the moving average convergence divergence, and it's easy just to pick some sort of bullish and bearish divergences and where again the market might be moving forward. So I'll get into those in another video, but I hope you enjoyed a few of the updates today that I've given you and the indicators that you can potentially use to stick on your charts. For anyone that's a beginner, they're great indicators to get started with, and it's basically where I started my journey too. So I hope you enjoyed this content today. If you did, please like, comment, share, and subscribe. I will be posting a few more videos today on actual TA. But yeah, that's just a little introductory video for you to get involved and get some indicators on your charts. I hope you enjoyed the video today. Please do like, comment, and subscribe. From Chart Nerd TA. Peace out.